today's plan is we're trying to get into doubtful debts, inventories, and some exam style questions on related to this particular two topics. These are not as intense as what we covered last week, like accruals and prepayments. That tend to be the crux of this whole unit because so many students do normally find the accruals and prepayments can be a bit challenging for them. But you also have to remember it is every part of this FAPS unit. It can be posing a serious challenges to once decide to get really good results out of this exam. As you guys are all aware, this exam it's for 2.5 hours. You get 6 questions. The ones we covered so far, it's only related to the first three um, questions. The one we're going to cover also is going to be part of first 3 questions. They will be counting for about 56 marks out of all 100, and then the last part is going to be all to do with statements, and that will be covering about 44 marks. But again, as I said, if the students do well in this part on the first 3 questions, they tend to do a lot better on the follow-up questions, which are most likely to be more general knowledge of your basic understanding of this advanced bookkeeping section of this FAPS unit. And you also have to remember these questions can be staggered, so they can put multiple things into one big questions there. It not necessarily has to be depending on only one topic, so it can be a mixture of multiple things. So let's have a look into this subjects as we go along. So first thing we're going to do is looking into accounting and inventory. I'll do the accounting and inventory straight away first, then we'll do some questions, and then we'll go to the doubtful debt after that, and then we'll do some questions from there as well. So the accounting for inventory, we start with what is the inventory. So that is something to do with the IAS2 calculation. So you have to remember how you to value the inventory. IAS2 is the International Accounting Standards. It does say to you, when you're valuing your inventory, you have to value the inventory at the lower of either the cost or the net realizable value. So you may ask me, what is the meaning of that? You may ask that straight away. What is the cost and what is the net realizable value? So when you remember, when you buy something there, you're paying for something for it. That is the cost. There is no ifs and buts there. Why? That's you already paid. That is an evidence there. You have a receipt to prove or an invoice to prove that is what you paid for. But in real life, that inventory will never retain the same value on the following days because it can go up in value, it can come down in value, it can even lose the value completely. So therefore, the cost is just for you as some sort of a standard. You know that is where the original cost was. But when I'm going to value it, I have to consider what drop off it had on there. So what is the net realizable value? Net realizable value is what we expect to get for it. Most likely your net realizable value is going to be higher than the cost. Simple reason is you want to sell it for that price so you can gain a profit, because that's the purpose of any business, isn't it? When you buy something, you're not going to sell it for the same price. You're going to put some margin there, and then of course you're going to help you to achieve some sort of a profit. But in real world, not every one of your inventory will retain that kind of a net realizable value, which is going to be higher. Problem is, due to times, because when you go forward in time, it may lose value for many reasons. One, it could be damaged. So what we need to do, we need to get rid of it. It can become obsolete. People don't want it, so you have to get rid of it. It can be also, in a way, you can get good money for it, but you have new inventories coming in. You have a potential of making more profit there. Then you have to sell it for a lower than expected price. Even though that is not obsolete, I just want to clear it. Like if you go to a sale, if you go to a supermarket, you probably see loads of items are reduced. It's not because they're obsolete, because people will still buy them. People will still have use for them, but the business decide, okay, they have better use for that inventory space. I can use something else instead of these stocks, so they can get rid of that one. So therefore, the net realizable value is whatever we're going to sell minus whatever cost it takes you to sell at that price. So that means if I'm going to buy something, if I'm going to go to the supermarket is going to put the price there. That is the selling price. But the net realizable value is whatever it cost, it took me to sell it that price. So that means it's going to be a lesser amount. So we'll see some example of it in this question here. So let me quickly go here. Let me stop sharing and then I'll be able to share the screen. That's easy if I do this way. So I'll get to my spreadsheet quickly. Not that one. Yes. Oh, hold on. I'll just add a question here. Just bear with us, please. Yeah, there's a question, first one. I think I put in the wrong one. Give me 1 second, please, guys. Where is the point? Yeah, that's the one. It's like swapping between screens can be very painful. Okay, so got it now. So the first question we have in play is this one. Elroy has valued its inventory at 31st of December 2020 at 1,036,498 pounds. The detailed review has noted some inventory is damaged. Inventory line A27 originally cost £10 per unit, would normally sell for £15 per unit. This is what we expect to sell. Now they're saying here 100 items have become damp, that means damaged, and will have to be sold for £80 in total. So what we now have to find out, what is the real value for it now. Okay, so we'll see that later. And the next one is, let me make this slightly smaller so I can put some extra information in there in a minute. Bam. Yeah. Next one is inventory line C12 is to be placed in clearance. Inventory cost £2,000 originally and is to be repackaged at the cost of £400 before being sold for £1,600. So let's say here the original inventory value. So inventory, its originally cost or the value of the inventory is going to be £1,036,498. Then I'm going to change that to 1,000 separated with no decimals. So this is the value of it. Okay, so let's say here that is the value. So let me add another line, insert. Okay, so here in pounds. So let's bring that to the middle. While I'm doing this, guys, just keep an eye out on what I do in the spreadsheets as well, because working this on spreadsheet will definitely improve your proficiency when it comes to your accounting skills. And plus, when you go into maths unit, you're going to be getting a lot more exposure into your spreadsheets. It does not hurt if you learn a lot of spreadsheet while you're doing this FAPS unit. So the next one is inventory we have in question. There are two of them. One of them is A27. So what we have to look at it. It costs you £10 per unit and would normally sell for £15 per unit. So in original what is that again, terms, the net realizable value is £15, but that is no longer case because all these items now, 100 items now have become damp and they're going to sell for £80 in total. So that means we're going to sell it for 80p. So the net realizable value in this scenario is going to be 80p per unit instead of £10 of cost. So we have to value that inventory at that new value now. So what we need to do, we need to remove the original cost. Original cost per unit is £10. How many units we have is 1,000. So adjustment for A27, what we need to do, we need to remove the amount first. So that amount has to be removed. So that amount is going to be 10 times 100. That needs to be removed. So this one is going to be equal to minus that one. So we're going to remove that. Let's make 1,000 separate as well. So the next one we have to do, we're going to add 80 pounds. That is my new net realizable value. So I'm going to say 80 pounds, which is going to be added on. So this will taken away, and this one's going to be 80 pounds is going to be added on. But then what is the next one? C12, adjustment for C, what? Okay, adjustment for C12. So here, C12 originally cost us £2,000, but we need to find what is the net realizable value. Is that going to be higher or lower? We have to look at it. In this scenario, the cost is 2,000. The net realizable value is this £1,600 minus the 400, because that is the cost for me to sell at this one. So we basically going to make a revenue of 1,200 after once we sold it for 1,600, because it's going to cost me further 400 pounds. So therefore the adjustment is going to be, it's going to be minus 2,000 pounds. So let's change that to a number format. And then we're going to add the new cost, that's going to be equal to 1,600 minus 400, which is your net realizable value. So I'm going to say here NRV. That is the new net realizable value for this item. So what we're going to do, let's change to a number. Okay, so and then we got that decimals. So now what we're going to do, find the inventory we're going to use here. So the closing inventory will be the total value of the, so we have to take away 3,000 at 1,280. So what I'm going to do, I'm just going to simply do a formula here. It will be 1,034,778 pounds. So what you notice here, we originally have to take away the cost from this, which is the 1,000 pounds on the first one. Second one is going to be 2,000 pounds, and you're going to be adding the net realizable value. The net realizable value in this scenario for product A27, it's going to be 80 pounds for the total of the 100 items. And then C12, because we are selling that for less than the cost price. So if you go back to that slides again, quickly look at it, the inventory will be valued at the lower of that one. So let's see here. Here, once you've done that, we're going to do this closing inventory. This needs to go into my profit and loss statement and my financial position. How would I going to consider that one? So let's say here, let's go back in this extended trial balance. This closing inventory is part of your cost of sales calculations, because you have to remember this inventory has not been sold. If it's not been sold, it could not be part of my cost of sales. So we will probably do my statement of profit and loss in this way. So let's say here, statement of profit and loss. So if you want to find the profit, we're going to look at first revenue, and then we have to take away less cost of sales. So that means for the revenue, we know how much we sell that products for, whatever we sold for that period. And the cost of sales will be equal to how much it cost you to make that sales for that revenue. So the cost of sales, it is calculated this way. It is the simple formula of opening inventory plus any purchases and take away closing inventory. So if I'm going to think about it, I probably will tell you this is an income and these two are both your expenses because that is what it cost you beginning of it. But what happened to the closing inventory? It needs to go into my statement of financial position as an asset. So if that has to be an asset in my statement of financial position, here on my statement of profit and loss, it will become a, a negative figure for this particular entry. So if you look at that, all of them, this has to be add, add, and take away. So this one will be an entry into my SOPL, credit SOPL, and then this will be again a debit into my SOFP because statement of financial position, this will be an asset there because that is going to be what we have left at the end of a financial period. Because for us, it's an asset, of course. The closing inventory is not being sold. If it's with me, that is an asset. So the entry for that in our books will look like this way: debit inventory, which is going to be the statement of financial position, and credit SPL. But then again, on the next year, when we're going to account for the opening inventory, this is what we'll do. We're going to credit the inventory account, which is the originally we starting that asset. We remove that opening inventory from there, and then we'll put that as a debit into the statement of profit and loss because this will now will be added together with my purchases to find what is my cost of sales is going to be. So it is like a never-ending circular process which we will do for our closing inventory. Okay, so that closing inventory will become opening inventory for the following period. So let's look at this here. This one, many people won't encounter a lot, but it has appeared in the exam few times. Because if you notice that here, this is what we used to learn our FIFO, LIFO, AFCO methods in the past when it comes to the costing unit in the management accounting style of it. Suddenly, this appears on the financial accounting. Why? We still have to use those methods to find out the inventory value. So, what is the meaning of FIFO? They're asking here the company values the FIFO method. So, here, what they do first in, first out. So that is how I'm going to value my inventory. So here, what we notice, let me quickly check why it's not, okay, I think I'll probably have to get rid of this. Yeah. Then I'll get the cursor coming back in now. So here it says here, AB Limited is formed on 1st of January of 2022 and trades in two products, product A, product B.
Yeah.
At the end of it, its first half year, the inventory movements of the two products as follows. You have product A and you have product B. So what we now seen here, we bought 80 of these items, sold it for £60. We bought 100 of them, we bought 60 of them, and then we sold 120 at £22. And then we left with 70. So they saying here, the company values the inventory using the FIFO method, first in, first out, at what is that again? At the 30th of June 2022, the net realizable value of each inventory is £2,650 and £1,300. This is an additional information. What we need to find out, what is the first question is sales revenue for the half year. So sales revenue is how much we sold these items for. So let's see here. Can we find a way to work this number out? Let me check why I can move this over here. Yeah, that's fine. Delete those. I don't need those. Delete. Okay, so let's go back in here. Let's say here. So product A. Let's do product A, B. So let's say here how much is we sold. So we sold 60 at £80. So here is equal to, let me get rid of this, delete and delete. So here what we sold equal to 60 at £20. It's going to be 1,200 there. And then what else we sold here? 120 at £22. So that is the selling prices. And the next one is B 350 at £8.50 a unit. So let's do the formula equal to, and the next one is 300 times £6. So the total for A is going to be this way. So let's do the sigma and then equal. So the total sales revenue is going to be 8,615. I simply done it. This multiplied by that, this multiplied by that, this multiplied by that, this multiplied by that. So what they're asking here, what is the total sales revenue? 8,615 pounds. Okay, so what we now know, it is a straightforward calculation when it comes to revenue. But the biggest question is how we value the inventory for FIFO basis for product A. So what we're going to do now, we're not going to look at the selling prices. We're only going to buy the costs. Okay, so here, if I'm using FIFO, for example, let's put it this way, product A. So initially, what we had, let's say here, purchases, and then balance. So here, what we purchased 80 at £10. So what is the balance now? It's going to be 80 items. I'm just going to do this way, equal to that times that. So it's going to be £800. This is the balance of it. So this is the cost per unit. This is the number purchase. So number of purchases. Okay, so that's fine. And let's do this way. Delete. Okay, so that should be fine now. Product A. So do we have any more of it? Yes, because if you noticed, I have issued 60 items. So if I issue 60 items, what is left now? We have 20 items left. That is going to be equal to £200. That's the balance now because this is what we issued. Did I buy any more of it? Yes, I bought another 100 more. And how much is that's going to be? Each one of them for £12. So this is the cost we have purchased now. And what is the new balance? So new balance is going to be equal to how many items? Equal to that plus that item, 120 items, but how much is the value? So the value is going to be this times that number and then plus the 200. So it is going to be 1,400. We have to remember, once we issue, means when he sold an item, you only left with the first item we have bought. Now let's see here, let's buy some more. We're going to buy some more now, 60 items at £13. So what is the balance now? We're going to do this is equal to, let's do the same formula. It should work. Altogether 180 item, and here Control C, Control V, 2180. See, my formulas are all working. How I got it? This times that, that is the new purchases. So let's prove it again. This times that number, it is going to be how much? 780 pounds, and we add 1,400, which is my existing stock, and it's going to be coming up to 2,180 pounds. That is fine. But now at that time on May, what we have done, we have sold 120 items. So where I'm going to draw that 120 items from? Please check this now again, guys. Initially, I had 80. I sold 60. Okay. So how many items we are left with? This 20 here. So we need to sell that 20 to sell 120 items. Okay. And what else we going to do? If I'm doing FIFO method, I need to either take it from this 100 or 60. Which one do you think I'm going to be taking? FIFO means first in, first out. I need 100 more. I'm going to take all of this 100. All of this 100 will be used. So once we used it, we only left with 100 plus 20, 120. So take that away, which we will leave with 60 items. But what are those 60 items cost you? They all cost you £13 because we already sold these 80 items which we bought for £10, and then the 100 items we bought for £12. So they both all sold, and we are now left with only this 60 items which were costing you £13 a pop. So here I'm going to have, this is the value of inventory on that day. But now we purchase some more, which is 70 items at £13 and 50 pence. Let me change that to two decimals. Okay, now how much is the inventory we have? We have 130 of this inventory, and the value is going to be, for me, it's going to be that times that plus the 780 from that 60 items we haven't sold yet. Altogether, I will have £1,725. This is according to the FIFO method. FIFO method will give me £1,725. But now you may ask this question again. All right, I got that figure now, but can you see here for product A, the net realizable value is £2,650. So here, this is going to be the cost. This number here is the cost. Let me highlight it with green. So here, and what is my NRV? NRV is going to be 2,650 is my NRV, net realizable value. So which number I will be using on my inventory calculation? This is going to be the cost. Cost is the one we're going to be doing. NRV, we won't use it here now. Why? Because the cost or the NRV, which one is the lowest? The cost. I use this on my inventory calculation. Now let's do the same thing to product B now. So let's see here. For product B, it will be slightly different. So let's see product B here. Now, product B, what we bought it for 300 items. So here, purchase 300 at £5. What is the balance in that case? 300 items. And that gives you that, that times that number, 1,500. And we bought further 200 now at £5.50. So let's change to one more decimals there. And we have 500 units, and that 500 units will cost you that times that plus whatever we already had here, 2,600. Now what we're going to sell? We're going to sell 350 items, but I need to know how much it cost me when I sold the original value of it. It's what it is here, where I'm going to take it from. Am I going to take from 300 first or the 200 first? I have to think about it. First in, first out. So I must use up all of the 300 here. That is all being depleted. Once it's depleted, we have to go into the 200 items. I have to take another 50 from there. So what we're left with, the balance will be 150 items, and they will be all costing at £5 and 50 pence, because already we sold these 300 items according to that. So currently the inventory value is 150 items at £825. Now what we got, we bought further 250 items. I bought further 250 items. They're £6 a pop. So what we got now, 400 units. Once I have 400 units, what is the total value of it? Again, we're going to do a formula. This times that number plus this 825, and it gives you £2,325. But now we have a small question. Again, we have one more inventory coming up now. How much is going to be valued at? So here, 150 items. We bought for £5.50. See the price now comes down. So it's not relevant for me at the moment, but you just have to keep an eye out for it. Sometimes it does not follow the trend. So it is 150 items again. How many items we have in our stock is 550, because it's going to be this plus that. But how much is my inventory value. So it's going to be Control C, Control V. It's 2,150 pounds because this times that plus this 2,325 pounds, which will give you 3,150. But we have further sales. We have sold 300 more items. So once we sold 300 out of the 550, we are left with 250. But we need to know what we have and what we don't have. Do I have anything of this 300? No. All this 300 is depleted. So it's gone. So let me just say yellow for this here. This is all gone. Do I have anything left on that? Yes, I have 150 left on that one. So I'm going to use that one. Do I have to take from this or that? This 250 or 150 next? Because I need another 150 more. But according to what rules we have, we're going to be using 150 from here, another 150 from there. So therefore, what we now used is 150 and 150 here. That leaves with 100 items at £6 and 150 at £5.50. So let's say here, this is going to be 100 items times £6.
600.
These for £6. And then plus that times that one. Let me bracket it because when I do brackets, things tend to go well. So the one I'm left with is 1,425 pounds. What we call this? This is the cost. And the next one is we have 1,300 pounds as NRV. So we keep that two numbers here. This is cost. This is NRV for product B. What is the rules again, guys? We're going to be using the lowest of either the cost or the NRV here. So in this scenario, when I'm going to do the inventory valuation, final inventory, we use this number instead of the cost number. The cost will be no longer relevant for me when I'm going to do the inventory calculation. So they're saying here, what is the number? 1,425 here. So here, what is the next question they're asking you? The total inventory valuation at 30th of June comply with IAS. So what is that inventory valuation? Is going to be this plus that number. So it's going to be equal to that plus that number, which give you 3,025 pounds. This is my total value of my inventory. Now they're asking you here, calculate the cost of sales for the year, for the half year, that is to comply with the IAS 2. So since this business started on 1st of January 2022, we didn't have any opening inventory, but we do know what are the information we need to get it from. We know how much is the sales revenue. So cost of sales is going to be your purchases minus the closing inventory. How much is my total purchases? Then I'll be able to find that out after that, isn't it? So my total purchases are, we're going to be adding all of that total cost I bought the goods for minus this closing inventory valuation, 3,025, which will give me my cost of sales. So let's say here, how much we bought the items for. Let's see quickly. First, product A. So total purchases. So this times this times, I can easily do this way. Okay, so here purchase cost is going to be equal to that times that. So I'm going to do simply, I'm going to copy this formula and paste in all of those here. And then also here, 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 here. These are my total purchasing costs. So let's say here, what is my total purchase? So here, all of those numbers will give me my purchase. So here, what we're going to do now, how are you going to do that? We're going to say revenue But they didn't ask you that. We just want the cost of sales. Cost of sales, that is going to be equal to purchases minus closing inventory. In this scenario, yeah, this is what equal to cost of sales is equal to purchase minus closing inventory. So here, what we're going to do, the total purchases minus this cost of sales, that gives me the value of 5,625 pounds. Again, guys, this is a very deep question, but I haven't seen this in the real exam. But this is a way the businesses may choose to calculate the inventories. Okay, so one good question out of the way, but now let's look into the next section here, which is for doubtful debt. So, what is irrecoverable debt and doubtful debt? So, you heard about them before in kind of not sure about these things. Irrecoverable debt is something could not be recovered. Means people are no longer there, gone. They either become bankrupt, ran away to Cayman Islands, you never know. But doubtful debt, on the other hand, is to do with something we call a prudence concept. Recognizing those doubtful debts, that means if I have any of my customers, they might not pay you in future. I have to recognize those early enough. That means I can take the hit now than later. Put it this way, we have to make the assumption some of your customers may fail, because in a perfect world nobody will fail, but we don't live in a perfect world. We can expect some business not to be what do you call, in this kind of a situation. So what we need to do, we need to make an allowance for it. So what we'll do, we will set up a couple of different types of allowances. One of them we call a specific allowance. It could be for a particular invoice or a particular customer balance. Or we can set out a general allowance. That general allowance, it goes as a liability on a whole of your receivable ledger control accounts balances, because after we take the specific allowances away, whatever left there we can consider, we say okay, 5% of that, it could be as a general allowance. So how we account for it? So the question we ask ourselves is, how did we do this in the books? First, if you look at that here, this is against your RLCA, which is your credit customer balances, receivable ledger control account. So if your receivable ledger control is an asset, your allowance for doubtful debt has to become an opposite entry to that one. So therefore, this is going to be a liability. But that is first time we create it. When we create a liability, that liability can be adjusted due to business requirements on every year going forward. So that's what we do. That particular allowance for doubtful debt could be adjusted every year by either increasing or decreasing. So what we do, we will look into that when we go into creating the account for allowance for doubtful debt. We will say we debit the allowance for debt adjustment account. It goes on the profit and loss statement because it's a debit, that is an expense. But the allowance for doubtful debt account will go as a liability against your RLCA balance. So on my financial statement, the amount you say as a net asset, because you're going to have the RLCA take away any allowance for doubtful debt there. So that is what we do when we create it. And then what we'll do, in case we're going to change, we either increase or decrease, we'll make the adjustment in debits or a credit side of it. We'll see an example as we go along. Okay, so let's look at a couple of questions and then we'll look at an exam style question after that. Okay, so here, let me get rid of this because otherwise it just annoys the slides. Ignore this one. I don't need it. Okay, so here, this is a good question. Why I have question 5, I don't know. It's supposed to be question 4. All right. Peter had the following balances on his trial balance on 31st of March 2024. Total receivables is £61,000. Allowance for doubtful debt receivables on the 1st of April 2013 is 1,490. After the trial balance has been prepared, it's decided to carry forward 31st of March 2024 a specific allowance of £800 and a general allowance of 1% of remaining receivables. It is also decided to write off £1,000 worth of debt. These are the irrecoverable debts. What is the total charge of irrecoverable debts which should appear on the statement of profit and loss, and the doubtful debt which should appear on the statement of profit and loss and the financial position? Okay, no, on profit and loss. They don't want to worry about the statement of financial position yet. So what we now know already, we have two numbers. One of them is £61,000 for RLCA, and then also allowance for doubtful debt. From that year, when we beginning, it was 1,490. Haven't seen the original bit, like I said to you. We had to create the new balance. We haven't looked at that. We only go and look at the something is already remained there. We'll look into the creating part in the next question. So here we need to write off £1,000 irrecoverable debt, because that is the first thing you have to do. Irrecoverable debt are facts. These are not doubtful. They have already happened. So what we're going to do, we look at the RLCA account. So if I'm going to look at the RLCA, the original balance of my RLCA is £61,000. So we need to credit RLCA 1,000 and debit irrecoverable debt 1,000. So what happens now? This irrecoverable debt is being written off from my receivable ledger control account. So what is the new balance of my RLCA? RLCA new balance, it's going to be £60,000. Now we'll be able to find out how much irrecoverable debt is already been done now, the allowance for doubtful debt. What we know though, we have a specific balance of allowance of £800. So what we need to do, we find the specific allowance, which is 800. So what is the general allowance will be? Allowance will be 1% of the remaining receivables. So this minus 800. So I'm going to have times 1%. Where is my percentage? Here we go. It's going to give me 592 general allowance. So the total allowance for doubtful debt is going to be equal to this plus that number, which will be 1,392. Originally, the allowance for doubtful debt was £1,490. Now, is that allowance for doubtful debt is increasing or decreasing? So if I'm going to be quickly here, let me find a copy of a account. So here, allowance for doubtful debt, it has a balance brought down figure of 1,490. This is what we started with. So the entry should be is somehow to reduce this balance. So what we're going to say, adjustment of allowance for doubtful debt. So here, this one needs to come down from 1,490. My apologies, guys, something on the screen. It's not letting me move. Okay, yeah. All right. So here, 1,490, the new balance brought down has to be 1,392. Is that going to increase or decrease? What do you think from here? It is going to be decreased by £98. How I'm going to decrease it is by entering on this side. So we here, if we put £98, which will eventually lead the amount of the balance carried down figure to 1,392. So this is the total and this one will be my balance carried down of 1392, and this entry we call adjustment for allowance for doubtful debt. So here on this time we're going to say allowance for doubtful debt 98 pounds. So what we now know though, there is an expense. This one will go as an expense in SOPL, but this 98 pounds will be going as a income in SOPL because we are reducing our liability. This is a credit entry into my statement of profit and loss. This is a debit entry. This will go on the debit side of the trial balance. This will go on the credit side of the trial balance. In turn, they will be remaining on the debit and the credit side of my statement of profit and loss as well. But what if this one is going up? If in case this one goes up, for example, let's say here the general allowance has to be 1,000 pounds. If they say the general allowance is 1,000 pounds, now we have changed the tone. The tone is now we're going to look at it. This allowance for doubtful debt from originally. So let me quickly do the same account again. Let's see, Control C and Control V. Let me go here. We started with that balance. So it's now have to become 1,590. So what we need to do, we need to increase this figure. So we have to make an adjustment of 100 pounds here. And that gives you 1,590. And this one, 1,590. And this balance carried down 1,590. And balance both down 1590. But what is the important part here? The adjustments now on the opposite side. So we will say adjustment for ADD here. On this time, allowance for doubtful debt adjustment account will have an entry on the debit side. Now again guys, initially we said about this, if this is on the credit side, this is an income and this will become an expense in the statement of profit and loss. Please remember guys, the adjustment account is the only one can go both sides. The allowance for doubtful debt will always remain on the credit side. That entry is always a credit amount, the balance. But the adjustment will either increase or decrease it. We're going to see in this question now. Can you see here? In this question, we have the similar way. We're going to start with the new account first. So let's say here, we have started my balances on December 21, 2021, so 31st of December 2021, 2022, and 2023. So every year we have to make an adjustment. So what we'll do, I'm going to bring those T accounts again just to give me some clarity of this particular scenario. So let's say here, where's the T account? So let me make this slightly smaller and get rid of this so I can do my T accounts here. Yeah. Oh, hold on. Y, C, and here. Yeah, that's it. Now let's do here and we can work out what they mean by this. So first year, we have a trade receivable of 84,900, irrecoverable debt written of 700 pounds. So 700 pounds is written here. Yeah. And what we're going to do in this scenario, the statement of financial position will have how much left on after we written off this. So the RLCA will have a credit entry. So what will be the statement of financial position figure there? So that is going to be 84,900 minus this 700 pounds of irrecoverable debt. This is the net amount after we done the irrecoverable debt, but we haven't still done the allowance for doubtful debt. Let's find out how much will be the allowance for doubtful debt. They're saying here the allowance for doubtful debt on the first year is going to be 4% of that number. So what we're going to do, we're going to create allowance for doubtful debt adjustment. So what we'll do here, I'll have this as a T account. Let me do that as a T account here. Let me see. Yeah, allowance for doubtful debt adjustment. Did I have too many adjustment allowance for doubtful debt? We do ADJ, ADD. That's how I write it down. So here, what we now, adjustment for allowance for doubtful debt is going to be equal to that times
4%.
4%. Well done, guys. So if you got that right already,
Uh-huh.
3,368, because that is the first time you're creating it. And this one will be going as allowance for doubtful debt. And the amount is going to be 3,368. Remember, guys, this will go into my profit and loss statement as a debit entry on the first year, 3368, and on my statement of financial position, 3368. This will be the amount now. So now let's look at the next year. What we know already, this is being already sent to statement of profit and loss, but this one get carried over. So here, this is the year one. So I'm going to keep on adding some more. Insert, insert, insert. So I'm going to do this here. Let's say here, balance board down 3368. I'm not even doing the total because this is the next year we're going to look at. So let me just see whether I can insert another line there. Okay, so here, let's insert a line. This is going to be 2021. And this is now 2022. So we are 2022, we are starting with 3368. So this is the SOPL 2021. We already clear that amount off. We get rid of it for my statement of profit and loss. Now, next question is, we have here the trade receivable. We need to look at it is a 93,100. Irrecoverable debt is 500. So receivable ledger will have, after we written off 500 pounds, amount of 92,600 pounds. What is the amount of allowance for doubtful debt I need to have? The allowance for doubtful debt now has become still 4%, and you have to change it with the level of trade receivable. So we need to find out how much it needs to be. So here, let's say balance board down figure should be how much? It has to be that amounts times 4% again, because that is the one they want the number to be. They want the number to be 3704 from 3368. How I'm going to make that change, guys? I need to add some more numbers here. That number is going to be equal to, hold on, where's my calculator? Equal to that minus that figure. Because if I put 336 pounds more, which is going to be adjustment for allowance for doubtful debt, so here in this scenario, that will be a debit entry 336. Can you see here, on the first year I take a big hit, on the next year it is only an adjustment. We only changing the numbers back and forth now. So this will go into my SOPL on 2022 as an expense. So here 336, but in this scenario, these two numbers will produce that number. This is the new balance board down for 2023. But now we need to see on 2024 what is the new balance board down has to be, because we need to find out. We start with what balance is so much slashes. Okay, you got that now. So here, what are the entries we making here? We have to make 500 now. And here, do I have to increase the adjustment? Yes, this adjustment is now increased on the debit side, 336 pounds. But what is my statement of financial position figure for the allowance for doubtful debt? That is going to be 3,704. People may ask me, oh, aren't we doing debits and credits? No, it's not that. It's just the figures. They want you to show the adjustments, what adjustment we made, and what will happen to this number once I made that adjustment. When I increase my allowance for doubtful debt, this is the adjustment I needed to improve that number to 3,700 per. Now things all going to change. At the moment, the allowance for doubtful debt is 3,704. What is my net receivables at the moment? Is 92,000 minus the 600, which is 91,400. So here, the number I expect to have on the third year is going to be the 4% of 91,400 pounds. What do you think it's going to happen to your allowance for doubtful debt? It is going to be coming up or coming down. You can simply say this. Can you see that number is higher than that number? Therefore, allowance now has to come down. How much by? That is the question. And which side I'm going to be recording this time? I have to do that on the credit side. So debit side on this one. So let's say here, how much is that number? That minus that figure is 48. So here, that entry, sorry, I have to put it here, that minus that figure, we basically reducing my allowance for doubtful debt by 48 pounds. Let's say here, this is going to be called adjustment of ADD, but on this scenario, this will go as allowance for doubtful debt, change that to 48 pounds, and this will go into SOPL on 2023 as my income. This will be on the credit side after that. So what is the adjustment in this scenario? On the statement of financial position, you have 3,656 for allowance for doubtful debt. The adjustment was 48 pounds on the credit side of my statement of financial position. Can you see here? This one is the initial creation. This one to increase my allowance for doubtful debt. Can you see here? That has now gone up from there. And on the third year, the allowance has come down. This is how we do these questions, guys. You have to keep an eye out for these questions. You have to be very careful. When you see these numbers, it fluctuates depending on the business requirement. So that's a very good question to look into. Now let's look at one more question before we call it a day. I had a stretch question, but I don't think we'll have time for that because this is a big enough question anyway. So let's say here, this activity is about accounting for irrecoverable debt and allowance for doubtful debt receivables and preparing a trial balance. So let's say here how we do it. We are working on the financial statement of a business for the year ended on 31st of March 2023. In this task, you can ignore VAT, so not worry about that. Following irrecoverable debts are written off. 90 pounds for Fennel, A. Sheldon 160, and 45 for Palgrave stores. So altogether, all this irrecoverable debt is going to be written off. So what we're going to say here, RLCA for the value of 90 pounds plus 160 pounds plus 45 pounds, that equal to 295 pounds. It's going to be written off there. And also we have to do the allowance for doubtful debt at the beginning of the year has a balance board down figure of 600 pounds. So this is a typically an exam style question on this one. So what we will do here, we're going to look at the RLCA balance. What is the RLCA originally coming up as? 20445, and here that is a number we have. What is the adjustment we're going to do? We're going to write off 295 pounds. It's on the credit side of it. Irrecoverable debt, we have an adjustment of 295 pounds. Can you see here? Both adjustment cancel each other when it comes to debits and credits. Okay, but this will be an expense. This will go into my profit and loss statement. This will have an entry of a net amount into my statement of financial position as an asset. So how much is that going to be? It's going to be equal to that minus that figure of 20,150 pounds. But what adjustment we need to make? The first question is the allowance for doubtful debt receivable to be set at 4% after irrecoverable debts. So here we need to have a balance board down figure. Balance board down figure equal to that times 4%. 4%. You see, most of the questions I've seen is either 4% or 5%. So here equal to 4%. Where I got the 4% from? It looks different. Oh yeah, 4%. Now, yeah, £806 is the new balance for allowance for doubtful debt. So that is the 4% of £20,150. So how much change I need to make to bring this to £806? So I need the value of that minus that, which gives me £206, which is the adjustment for ADD. So this one will be a credit entry into the allowance for doubtful debt account. So here, this will be a credit entry for 206 amount here, and the adjustment account will have a debit entry. Can you see this adjustment we have made now? So once we done that, these are the entries you need to make. So do I have to make any adjustment on these accounts? No, these are not relevant. They are just there as an what is that again? They call the right word extract from a trial balance. So these numbers we don't need to worry about it, but these are the only adjustments I have to make. The adjustment 1, 2, 3, and 4. These adjustments are necessary to make sure the entries will go into my either statement of financial position or statement of profit and loss. This will go into my SOFP, and so as this one, and these two will be going into my statement of profit and loss, and this is also going to be statement of profit and loss. These two will be expenses, and this one will reduce the balance of my RLCA, and this will give me a new balance for allowance for doubtful debt of £806. So if I look at these questions, guys, when it comes to doubtful debt and then the adjustment, it's all about you recognizing we have this allowance for doubtful debt always will be a liability. It's a credit balance there. So I'll put it on this side. It is a liability against my RLCA in my statement of financial position. I may be able to show you a sample of it, but I could not find the file which I had the example of. We normally use that in my statement of financial position against the RLCA value. So let me see whether I can quickly find out where it is. Let me just quickly check it. I may have find a video or kind of a where's that allowance for doubtful debt? Yes, found it. I have something I can probably share it with you if I find it here. No, I can't find it. I thought it was the file here. I could not. But not to fret, we have done plenty of questions here today. I had chance. I'll probably, if you guys can give me about 5 minutes, I'll probably will do this as well. So let's do this question quickly, shall we? I don't think, it will take more than 5-10 minutes anyway. So let's do this stretch question to give you some sort of an idea how we're going to do this allowance for doubtful debt adjustables, accruals, prepayments, depreciation, which we have covered in the previous sessions. It might be okay if you want to give me 15 minutes. So yeah, you guys okay with it? Let's do it quickly, which I ain't got no problem with. So let's say here, what are the entries we're going to make? First, the adjustments. So they're saying here, the premises are depreciated 2% using the straight line method. So here, I already have a look at it here. If it's 2%, it goes from the original value. So every year, they're going to charge £2,000 depreciation. The adjustment is going to be here, 2,000 on the depreciation entry, and the accumulated depreciation will be £2,000 on the credit side. And then what are they talking about? Machinery here, that's also straight line. So we're going to charge them at amount of £24,000 times 12.5%. That gives you another 3,000 here, £3,000 on the accumulated depreciation as well. So what we're doing here, we made two entries for depreciation entries, one depreciation charge debit and the accumulated depreciation credit, and these will be eventually going to profit and loss statement, and these two will go into my statement of financial position. So let's see here what are the adjustment we're going to make on the next one. Allowance for doubtful debt receivable is to be a 5% of the receivable amounts. So did we have here the receivable amount already? Receivable ledger control is £5,000. So the adjustment for allowance for doubtful debt is has to be how much is it? So we have to find out what is my new allowance for doubtful debt will be. So at the moment, initially is 5,000. Initially, the allowance for doubtful debt account is £520. Is that going to go up or come down? We are going to consider 5% of the receivables. So the new allowance for doubtful debt. So here, let's say here, allowance for doubtful debt is now is going to be 5,000 times 5%, which is 250. So what we're going to do now, we're going to go from this £520 to £250. So we're going to reduce that by 270. So how I'm going to do this, I have to enter this on the debit side, 270 on the debit side, and the allowance for doubtful debt adjustment account will have a £270 on the credit side. This is going to be an income. Why? My payable receivable ledger control has 5,000, so the new allowance for doubtful debt is going to be only 250. So from 520 it has to be adjusted for 270 pound on the debit side. It in turns is going to give me 250 here on the statement of financial position. So that adjustment is now being done. Now let's look at the next one. The next one is wages accrued is 500. So accrual is going to be 500 pounds here, and prepayment, sorry, accruals is going to be a debit entry because it is going to be an expense. And hold on, no, it's not adjustment, isn't it? So it's going to be 500 here on the adjustments, and then the wages account will have 500 debit because it's going to be adding to that one. So let's say here another 500, and then prepayment, when it comes to advertising prepayment, that prepayment adjustment is going to be a debit entry here. How much is that adjustment is going to be? Prepayment is going to be £350, and on the advertising, so where's the advertising? 6,250. So that is going to be a 350 on the credit side because it's going to remove that from that year's expense. So we have done all the adjustments. So we have two for depreciation, one for the allowance for doubtful debt and adjustment there for it, one accrual and one prepayment. It's already been done now. So let's finalize our number. 431480, which is going to be my sales, the purchases. Sales is 95,660. Then we have the opening inventory, as I said to you, that will be a debit into my statement of profit and loss. Sales return and the purchase returns are 240 and 620. And then discount allowed 380, discount received 1080. And then we have drawings, which goes in my statement of financial position, 720 here. Then we have accumulated depreciation and the cost, 100,000, and this is 12,000 now on the next number. That is 12,000 because 2,000 added to already at 10,000 there, and this is 24,000, and that is now 6,000 because the new balance has been added on. Now this one, it's going to be equal to 18620 plus 500, and then next one is 2,260 minus 350. Why we removing it? Because it's a prepayment. It needs to go into the next year now. So next one is rent and rates, 15,630 pounds. And then bank is an asset, 4140. Receivable ledger control account is 5,000. Done. Payable ledger control is 3740. And then we have value added tax is 3240, got that one. Capital 81,290 pounds, we got that one. Bank loan of 45,000 pounds, we done that one. Statement of profit and loss, this one is going to be a credit side. And the statement of financial position, no, I don't need that 4 there. On the statement of financial position, that will be a debit entry because it's a current asset. Irrecoverable debt of £100 is going to be on my statement of profit and loss as an expense. Allowance for doubtful debt, its new value of £250 there. That's already been done as well. Now let's look at the other entries. The adjustments are going to be £270 allowance for doubtful debt adjustment, which is an income here. And then this one is going to be £500 a liability, and prepayment's going to be £350 a income. That's no income, sorry, it's an asset. We have to consider that as an asset for the following period. It has to be reversed back into their respective expenses accounts. Now the profit at the moment is 27,250 debits minus credit. So here 27,250 pounds, and that will give me this amount, same again, 27,250 pounds, and that should match my trial balance and my statement of financial position. Oh, it's out by some considerable amount. I think it's about £5,000. So where did I make the mistake? So let's check here whether we ignored any numbers anywhere. So here I'm checking all those numbers. That's fine, that's fine, that's fine. 34, yeah, okay. Did I miss any numbers? Receivable, bank, rates to 60,000. Advertising, 2,600, 600, 24,000. I know why. These two not meant to go here. This will go here as depreciation. Yearly depreciation charges. That gives you £5,000 here, and here there's no changes to any of those numbers. That will eventually have a £5,000 entry here. So that profit is now equal to £22,250. Now £22,250, my trial balance will match. Like that way, it's magic. I purposely think about it. Now, did I make critical mistakes? Yes, but when I consider these two numbers, I didn't change the number. I only put those two numbers against it here. But in fact, these will be your year-end adjustments. Can you see? These all four are eventually made into either the profit and loss statement and statement of financial position, and same as the others as well, it has moved into statement of profit and loss and the financials
That's the one
statement.
thing I like about you, Mo, though, because you'll make a mistake, and then it will show that we can all make a mistake.
Absolutely.
And then
you know how to go back and get it.
It just shows that we can all still make a mistake.
Absolutely.
And it's just, that's how simple it can be to just find the error.
Yeah, and you see that number, it gives me an idea what it was, isn't it?
Yeah.
Because I looked at the number there, it's out by 5,000. What is so obvious about it? These two numbers are equal to 5,000.
Yeah, I saw that you put that £2,000 in the premise of the cost, and I was like, it's there and it shouldn't be there. And
I was waiting for it as well. Yeah, but that's good. This is how it is, because in the exams, most of you, let me just stop sharing it, guys.